Hello dear Forex traders, welcome to 𝗙𝗙 Markets. You are watching weekly market overview by 𝗙𝗙 Markets. Let's start. Last week the Australian dollar was the absolute growth leader among the majors, having strengthened by 2.9%. The Canadian dollar and the British pound gained 1.1% and 0.7% respectively. The US dollar index has almost returned to the week's open without showing significant growth. The euro lost 0.3% against the greenback, while the Swiss franc and the Japanese yen lost 0.7% each. Last week, 4 central banks meetings took place. The Reserve Bank of Australia, Bank of Japan, Bank of England and the European Central Bank determined a monetary policy for the coming months. As the policy direction of all 4 regulators was relatively clear, the primary reason for speculation was the tone of monetary policy statements. But far more interesting was the US employment data release, because now the Fed is closer to a reduction of support measures than others. However, the numbers turned out to be mixed. Non-farm payrolls in August rose by 169,000, just below the forecast, but the unemployment rate even dropped to 7.3%. And it would not be so bad if the number of payrolls for the 2 previous months wasn't revised downwards by 74,000. As a result, the data caused US dollar depreciation at the end of the week. As for the current week, we are awaiting for industrial production and retail sales from China on Tuesday. On Wednesday, employment reports in the UK and on Thursday in Australia will be published. Finally, on Friday, we are awaiting for retail sales data from the US. According to the latest report of the Commodity Futures Trading Commission, futures market participants increased their long speculative position on the US currency, partly due to a reduction in the net long position on the euro. However, a net long position on the European currency is preserved, while the largest net short speculative positions are observed on the Japanese yen, Australian dollar, British pound and the Canadian dollar. Returning to the short-term picture, the key question of the next 2 weeks is whether the Fed will taper bond purchases and if it decides by how much. The August employment data left some doubts, but we believe that the likelihood of such a move is still large. The labor market is improving and therefore, in our opinion, the Fed may announce a moderate purchase cut of $10 billion on September 18th, while emphasizing attention that this measure is not a policy tightening and that the rates will remain low for a considerable period of time. By the way, before the monetary decision announcement, data on inflation will be released. CPI growth reached the Fed's 2% target level in July. A reduction of the QE would be a supportive factor for the dollar, but now we may see some increasing uncertainty in the market. Meanwhile, the euro-dollar continued its decline, rebounding from the resistance around 1.3450. Now the pair found support at 1.31, where the 200-day moving average and the 50% Fibonacci level are located. The pair pound-dollar is supported by a rising trend line, and the test of the August high at 1.5716 is likely. However, a major area of resistance is expected up to 1.5750. The dollar-yen has failed its first attempt to overcome a psychological barrier at 100 after it breached the downward sloping resistance line. Now, a pullback of quotations may be held, but we still believe the long-term upward trend will ultimately lead the pair to 3-digit values. You are watching Weekly Market Overview by 𝗙𝗙 Markets. Do not forget to subscribe to our YouTube channel and follow us every Tuesday. Goodbye.